Good
Also
afternoon, sir. Good to see you. All right. Hi, everybody. We apologize for running a little bit late. We have a special guest who's going to be doing our Pledge of Allegiance, and she was delayed, but she is on her way. So she's going to be here momentarily. So we're going to be changing the agenda just a little bit. So we're going to take care of some business now, and then we can go into our regular meeting. So we're going to moving at pace here. So I'd like to call this meeting to order. It's the King County Committee of the Whole. It is 3:10 and it's February 8th, Thursday, 2024. Could you please call the roll?
Allen,
Allen present by Zoom if acceptable.
Bates. Berman,
Is here.
Doherty,
Here.
Davist, Ford, Gums,
remote.
Iqbal,
Iqbal present.
Juby,
Over here.
Kenyon,
Here.
Caius,
Guys present.
Leonard,
Leonard here.
Lewis, Linder, Molina,
present.
Roth,
Roth here.
Sanchez,
Sanchez present remotely.
Mr. Sanchez,
Sanchez present remotely.
Strathman, Surges, Tarver, Mr. Tarver,
On remotely.
Tepe,
Deppie here.
Williams, Young,
Young here.
Huron.
Here. All right.
Silva was not called out.
It's not in the room.
I didn't call, I'm sorry, Miss Silva.
I didn't hear it. Silva.
Gotta show up more, man.
And is Mo on board? He's not here.
Yes. Can you hear me?
What?
So,
You have 11 in the room, so you do not have a in-person quorum.
but that's all right, because we're not going to be taking any votes today at all. All righty. So I'm going to, we have a special presentation from our clerk's office. There was a number of questions that were presented yesterday regarding the voting machines. And since today is the start of our voting primary time, I thought we'd bring somebody from the clerk to just kind of respond to some of the concerns that were brought forward yesterday by our members of the public. So John, do you want to come up?
Good afternoon, John Duggan. I'm a deputy clerk, and there was a series of questions asked by Mr. Young, and some of them involved the State Board of Elections certification process for the equipment that we purchased. That system was originally, it received its interim approval in January of 2022. The various software upgrades have been requested by the SBE and submitted, and those have all been approved within the ordinary course of the business. And the system has, as it is configured, is fully approved, was done so, we believe, according to the time period of the statute, and is certainly certified and compliant as of now with all requirements of the process. Now, I understand that there was some I heard as I was coming over that there was some concern by, a training version that possibly wasn't operating adequately. I don't have the details of that.
So do you have those details?
Yeah, I can.
Mr. Roth?
Okay.
And then I can make copies later.
Okay, great. Well, thank you. This was yesterday.
Correct.
We'll give you a written response to these as soon as we can. We also understand that there was a variety of concerns that were submitted to the state's attorney, and we've received its response. And I
You
think-
have her response?
Yes.
Okay.
Did you want to present that?
Who's doing the presentation?
Is there a state's attorney?
Oh, yes.
Official present?
Yes, he's right
I mean,
there.
it's their statement. I
Okay,
felt they should
absolutely.
present it if they wanted to.
You heard your question.
They're asking if there's a state's attorney in the room.
Who could do the presentation?
Raise your hand.
Did you wanna,
This is from the,
were you informed about the joint statement by Jamie Mosser and Ron Hain?
I am aware of the joint statement, but no one had asked me to give us.
Okay, I have it here and,
oh, well, why don't you read it to us? so
okay, I
we'll
will.
Read into the
I
record.
apologize that I'm not on the staff of the state's attorney anymore and, but I will read what has been submitted by
Okay,
the Kane County State's Attorney and Sheriff Ron Hain, February 7th. And it's a press release, so it's been released already. And what they say is that they've received complaints in anticipation of early voting beginning February 8th. This is dated February 7th. And then the complaints have been reviewed and the state's attorney has researched the relevant portions of the election code and associated administrative regulations, inspected and tested the voting machines and reached the following conclusions. And then the complaint relating to unapproved voting machines. The first set of complaints received alleged that Kane County had purchased unapproved voting machines. And on August 8th, 2023, the Kane County Board passed a resolution authorizing, Resolution 23-335, authorizing the Kane County Board Chairman to enter into an agreement with Hart InterCivic for the upgrade of the Kane County voting system. The complaint alleged that the purchase of the voting machine prior to its approval by the ISBE violated the Illinois Election Code. And the state's attorney states that on November 21st, 2023, the Illinois State Board of Election voted to give Hart a 2-year interim approval of their Verity 2.7 IL voting system. According to the staff recommendations, approval of the voting system. ISBE noted that on August 11th, 2023, Hart had requested approval of their voting system for use in the March 19th, 2024 general primary election. Administrative regulations require Hart to submit its application for approval no later than September 18th, 2023. The ISB staff reported that Hart's voting system meets the applicable statutory and regulatory requirements. While it appears that a portion of the Illinois Election Code regarding the timing may not have been strictly complied with, the voting system was approved before it was ever used in any election, including prior to early voting for March 19th, 2024 general primary election. We have not been presented with any evidence or specific allegations showing that Hart knowingly intended to disregard the relevant portions of the election code. And moreover, the corresponding ISB rules for approval of the voting system state that no voting system shall be used unless approved by the ISBE. In conclusion, the voting system was approved by the ISBE prior to March 19th, 2024 general primary election. The approval came in a timely fashion, and there is no legal remedy to alter what has occurred, even with the state not being followed completely, the statute not being followed completely. Based on this, we have found that the complaint was unfounded and the matter is closed. And then there was a complaint about voting machine irregularities, which I think might be what this 2-page statement relates to. Questions are raised during sample public demonstrations of the voting system hosted by the county clerk to educate voters on the use of new equipment. Specifically, several individuals reported that they submitted a name during the mock demonstration, another name was generated and printed on the ballot, and separately, the machines had difficulty feeding the paper ballots into the scanning device. Regarding the first issue, the machines that were used for public were demonstration machines provided by Hart. The demonstration program used by Hart is the same nationwide and is meant to display the capabilities of the program. Some states allow a candidate to use an alias name on the ballot to demonstrate the system's capacity to accommodate these laws. The test displays the name Abraham Lincoln on the screen and prints out the alias John Muir. While understandably confusing to those who use the machine during the demonstration, as this is not the procedure in Illinois, the machines that will be used in the March 19th, 2024 general primary election will have only one name. On February 6th, 2024, a state's attorney investigator and the state's attorney visited the county clerk's office with a request to try the machines. Please note that no actual votes were cast, but were performed as a test vote. And during that visit, they, referring back, I believe, to the state's attorney investigator and the state's attorney, were able to sample ballots for each primary ticket, Democrat and Republican. At the voting machine, the ballot was entered and the corresponding ballot was seen on the screen. Both were able to select test votes and confirm the selection made on the screen. The votes were then printed onto the ballot paper, and they were able to confirm that what was printed on the paper was who they had each respectively voted for on the machine. They were lastly directed to submit the paper ballots to the scanning device. Neither had any difficulty in feeding the final ballot into the scanning device. As such, we determined that there were no issues with the voting machines based on the 2 complaints that were received. The Kane County Clerk's Office, in an abundance of caution, will have the election judges ready and willing and able to assist any voter with the submission of their final ballot. We also believe that the Kane County Clerk's Office is generally prepared to assist during the voting process if there are any issues with the process. And based on this, we have found that the complaints are unfounded and the matter is closed. State's Attorney Mosser and Sheriff Hain commit to ensure a fair election process. Both have promised to be responsive to citizen complaints and to report findings.
Thank you. Thank you. There was one, I went over after our meeting yesterday to talk to the clerk's office about this issue. And I was taken to the back room where the voting machines were installed. And I was given under a lock basket a copy for just a moment, just to see if I could read it, because I was told that it was very challenging to read because the font was so tiny. Oftentimes I do need glasses to read. And I did not have those glasses with me. The reason I'm saying that is I could clearly read the font without any issue at all. So it was very readable and very legible. I gave back the document. It was put back into the file, and these were just tests because voting had not started yet. So these are just samples, but it is the sample that you would receive, exactly what you'd receive if you were a voter. So you can clearly read what is printed out without issue at all, at least from my eyes.
Thank you.
So are there any questions from this board for John?
Yeah,
Yes,
Madam
Mr.
Chair,
Roth.
David Young.
Mr. Young, yes, please.
Hi, David Young. I saw that statement by the State's Attorney's Office regarding the Hart machines, and just as a timeline, the Hart machines were they were signed. The contract was executed by Madam Chair and the Hart agent, I guess, or VP of Sales on September 27th, 2023. At that time, the Verity 2.7.il software had not been approved by the Illinois State Board of Elections. It had been submitted. So technically, the Hart violated the statute stating that they should not even enter into a contract with the Kane County Clerk's Office unless the voting system was approved by the Illinois State Board of Elections. So if you read the statement from the State's Attorney's Office, she does say that they meaning Hart, didn't strictly follow the statutes, which means they did not follow the statutes, and therefore they are in violation of selling a product that was not approved by the Illinois State Board of Elections on the date the contract was executed. And that's just a fact. Now, here's another fact. I'm going to keep going.
David, I'm going to stop you
this is
there.
my-
David,
this is
David,
my- this is-
if I
this is
may,
my
I'm going to stop you right there.
I can-
Respectfully.
Well-
The issue at hand that was brought forward and the questions that were asked addressed specifically the printout
getting-
that was given to them.
I'm getting to that.
Okay,
Thank you.
This
I'm
is-
getting,
Madam
it's
Chair,
my, it's-
Mr. Shepro, I'm recognizing Mr. Shepro right now, Mr. Young.
This is getting beyond the subject. Says it's on.
It's on, just put it close.
Okay. Yeah, this is beyond the subject matter of the specific question that was posed to the state's attorney, David, and would have to be investigated at a future time. It's not really
I-
properly on the agenda or matter for discussion.
Okay, Mr. Duggan brought it up. I will stop my comment there. Here is my question regarding the question at hand, which is that there are affidavits sent to the state's attorney's office regarding the voting machines printing out the wrong candidate that was selected on the touchscreen. And that was the issue at hand, and that was investigated yesterday or the day before by the state's attorney's office. My question to Mr. Duggan is, were those affidavits reviewed, and were those individuals contacted to discuss what they had seen, number one, and number two, were the voting machines that they were being trained on during the training of the election officials, were those specific machines tested at the clerk's office, or did the state's attorney just randomly go up and test a different machine? Thank you.
I don't know. I don't know.
Mr. Dugan cannot respond to that question.
The state's attorney's statement stated that the machines that were used in the training were provided by Hart, and they were not part of the delivery of machines that were purchased by Kane County. They were training machines specifically provided for that purpose. And as far as the separate name, I think there was a very detailed explanation by the state's attorney that the different name from Abraham Lincoln to John Muir was to enable the alias feature to be demonstrated, although that alias feature for candidates is not allowable in Illinois, and it's not part of our system. So I don't know why. Beyond that,
And I think that answers that. Mr. Dugan, thank you so much. I appreciate the time. Mr. Young, if you would like to have further information about this, I'm sure you can talk to Mr. Cunningham directly. Thank you both.
thank you both.
All right. Now I'd like to go into executive session for the purpose of closed meeting minutes. Clerk, could you please ask a motion to go into closed session?
Well, this Caius, I would move that we go into closed session to discuss closed meetings.
Point of
Notice
order.
of closed meeting.
Point of order.
Yes, sir.
Without a quorum, can you vote on closed session minutes?
I thought we,
Mr. Frank is here.
It's on the agenda.
oh,
Oh, yeah, I think the point of order is well taken.
I do too. All right. So we are, thank you.
Let's push closed session the next month, please.
We'll see you
Or the
next time.
I'm sorry, I
We'll
guess.
have
it'd be the
another
next count.
we'll have another meeting at the end of this month.
Either that or the sergeant at arms could go out and find the absent members and bring them.
I mean,
Bring
let's
them.
do it.
Yeah, yes, sir.
Thank you, Madam Chair. You know, I have a suggestion that we may want to consider, if it's possible to do this. Could we approve the minutes from previous COW meetings at a meeting, say that the county board meeting, where we know we'll have a quorum?
One would hope so. That'd be
So maybe we should just move the minutes
To the minutes.
for COW meetings to the county board meeting every month.
That
You
would be-
could have a 1-minute meeting of the committee of the whole as part of the county board meeting,
Excellent idea. Excellent idea.
include, yeah.
You could also
Wait a
do,
minute, we
Wait a
just,
minute, I think
wait,
a
we got,
quorum-
I think a quorum has just
Quorum has
entered the room.
arrived.
What's that?
No, we're still short.
We need one more.
We need one more.
Okay,
Never mind.
thank you. Okay, so,
I drove as fast as I could.
I believe that, Ms. Mann, our special guest has arrived. So we can now, do our pledge. And,
Well,
we'll
I'd like
have-
to let Dasha explain what she does for the Kane County Law Library and Self-Help Center. She is a Justice Corps Fellow. She'll give like just 1 minute of what she's really spectacular.
Well, before she begins to be spectacular, why don't you introduce her a little bit more with her first and last name and a little bit about what she does?
I want to introduce 23-year-old Dasha Pates. She is what I said, a Justice Corps Fellow. She is currently working with the Kane County Law Library and Self-Help Center. She was recently awarded by the Secretary of State the only John Lewis Youth Leadership Award that the state of Illinois handed out for her work in legal services and trying to help people who are disenfranchised and need help finding legal services through the Self-Help Center. She is also a first-generation immigrant from the Philippines. She's now an American citizen, and she's planning on going to law school, and I think I just ate up all of her time. But okay, here's Dasha. Okay.
Welcome, Dasha.
Hi, thank you so much for having me here. Like she said, my name is Dasha and I work as a Justice Corps Fellow in the law library. So I help all the people without attorneys. So as we know, like when you get arrested, if you don't have an attorney, you're entitled to a public defender. But for civil cases, so divorce or eviction, nobody has a right to an attorney in that case. So a lot of self-represented litigants are kind of lost by themselves. So Justice Corps is a program under AmeriCorps that they place us fellows in counties all over the state. And we help all the people without attorneys with filing their documents, finding documents, figuring out the path that they need to pursue a civil legal case. And we get them on a lot of court hearings, meetings, and navigating around the courthouse.
Very good.
Great.
Very impressive.
Thank you so much.
So are you ready to do the pledge?
Yeah. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you so much for having me.
Oh, thank you. Thank you. And thank you for coming. Do we have any public comment today? No, no public comment. All right, I'm going to turn the rest of this meeting over, at least for a period of time, to Kathleen Hopkinson.
Hello. Hello. Okay. So we have previously talked about starting the budget process early. So here you go. It's February and we're already talking about the 2025 budget. I thought what I would do today, before we get to really what the budget schedule might look like, and I really mean this to be a discussion today. There's a presentation of some technical accounting.
Kathleen, I'm going to put you on hold for just a second. Do we indeed have public comment?
Frank, question.
No, there's no one.
Apparently there was. Just was.
Madam Chair, thank you very much for this opportunity. I want to say hello to all of you. I haven't been here in a while, but it's nice to see all of you. You can recall
Zito, you have 5 minutes.
Yes, okay. Hopefully I will not take 5 minutes. When I saw that the agenda today for this meeting, I had to make some arrangements so that I could be here because I wanted to see how the budgeting process for the county is done. I know last year, maybe it wasn't handled exactly the way we thought it should be, and things were done late in the year. I really believe that this presentation that I've read through is very good. Okay, I commend the production of this thing. My only point is the very last slide has some recommendations and things for discussion. I would hope that the board as a whole might take other items and say, and I don't know exactly what that would be, but that we should direct the departments either to keep the payroll at the same level or watch what equipment we're buying to try to safeguard that we're doing everything we can to save every penny we can for the county. And very quickly, I would like to say something about the presentation that was just made, if I may, about the voting equipment. I've heard that there were a couple of cases where there were problems with the testing that was done. And I also heard that the state's attorney actually went in and did a test. My understanding, and I may be wrong, I don't know, but the person or people that complained about the error, my understanding was not invited to this test. So I think from a standard that to keep everybody informed, it would have been nice had they been able to see the test. Also, was the test done on the exact same machines that had the problems? Because I think I understood that maybe they're not the same machines. Maybe they're test machines and the actual machines to be used in voting is a different batch. My background as an internal auditor, my ears perk up when I hear something like that, because if there are two batches, there could be different software in the different batches. And that's why I'm still a little skeptical about the voting machines. Thank you very much.
Okay. Kathleen, please begin again. Thank you, Mr. Esposito.
Sure. So the entire first section of the presentation, I'm going to be talking about governmental accounting. I hope it's not too dry, but I think it's important. I've received, just in my conversations with people, I think it's important to go over how our funds are structured, how they work, how money moves between funds or doesn't move between funds. So the whole first part of this presentation is on governmental accounting, just generally. And then we'll talk more broadly about the budget process. And I do mean the schedule today to be up for discussion. This is a recommendation, and I'm hoping that that there is some good, healthy discussion here about how we can move forward with the 2025 budget process. So there are governmental accounting is different than private accounting. There's accounting principles that are followed by both private companies and government organizations, but government organizations follow a whole set of accounting pronouncements covered by an organization called the Governmental Accounting Standards Board, also known as GASB, if you've heard that term before. They are the organization that issues all of the pronouncements that governments must follow when they produce financial statements. When our auditors come here, they audit to make sure that we're in compliance with all those principles according to GASB. Part of governmental accounting is that we have many funds. So why are government revenues and expenses in so many funds? So at our county, we have the general fund, we have dozens of special revenue funds, we have capital projects funds. Why are there so many funds? The reason why we have so many funds is there's many laws on the books, state statutes, local laws, board ordered rules that restrict how certain types of revenues such as taxes, fines, fees can be spent. So governmental accounting responded to this need by creating all of these different types of funds. So depending upon your different type of revenue, the revenue is put into different types of funds. And that way the money is kept restricted and it's tracked and used only for those purposes. Federal and state governments also award grants and reimburse costs that can only be used for specific expenses. I'll use ARPA for example. The county is currently receiving currently has ARPA money, which can only be used for specific things. We receive state grant reimbursements for our juvenile court employees. It can only be used to reimburse their salaries. It can't be used for any other reason. We received emergency rental assistance grants during COVID. It can only be used for emergency rental assistance. So in governmental accounting, the whole reason why you have all these funds is there's all these different restrictions. We often talk about, can you use revenues from one fund to use to help balance another fund that doesn't have enough revenue? So there are laws that restrict how, going back to the same reasons why you put money in different funds. There are laws that restrict how certain tax, fine, fee revenues can be spent. There are board decisions that restrict how certain monies can be spent. There are budgeting decisions on how money can be spent. So moving revenues around complicates the view of operations, maybe making one business unit look good when it really isn't able to operate within budget. So a couple examples of that. I really do look at each one of the funds as almost like a little business unit of an organization, of a company, let's say. And so you're looking at the revenues and expenses. Are they able to sustain, is that fund able to sustain itself with the revenues that it's receiving? But then you'll see transfers in for certain years, but not all years. So when you're transferring money between funds all the time, that can be a sign that that fund and the operations of that fund aren't able to sustain themselves. And so you really need to look at what's going on in the operations of that fund. It creates a situation where expense budget increases are being funded by temporary transfers from another fund, a situation that is not sustainable in the long term. So if you're transferring money between funds and you're continuing to increase expenses of a fund that isn't able to sustain itself, you're kind of propping up operations that can't sustain themselves. And that could be a risky situation. For budgeting purposes, it makes it more difficult. So what are different types of government funds? And these categories are right out of the textbook. The general fund of a county is sort of the fund that isn't restricted. So it accounts for all resources that aren't accounted for in any other fund. And we have one general fund. Most governments just have one general fund. Then we have all sorts of, and at the county here, sometimes we say special funds for short, but we have many different types of special funds. We have special revenue funds, capital projects funds, debt service funds, a permanent fund, and we have more on the next page. And these are definitions that are taken right. These are textbook definitions right out of the GASB pronouncements. So special revenue funds, we have 85 currently at the county. They are meant to hold proceeds of specific revenue sources that are restricted or committed for specific purposes other than debt or capital. Capital projects funds are funds that are restricted, committed, or assigned. And I'll talk about what those words mean in a second, to expenditures for capital outlay. So most of the capital projects funds at the county, not all, but most of them are at KDOT. And then of course we have the one big capital projects fund, which handles most of our building management projects. And then we have debt service funds, which when we have debt, and we do have some debt remaining at the county, we are paying the principal and interest payments on the debt out of those funds. And then we have one permanent fund, which is a fund which it's a working cash fund, which is resources that are restricted to the extent that only earnings and not principal can be used by the government. So we have one permanent fund. It's our working cash fund. It has a few $1 million in it. And then we have 3 more different types of funds: proprietary, internal service, and custodial. Proprietary funds, we have 2 at the county. One has to do with Settlers Hill, and one is the solid waste disposal fees, our enterprise surcharge funds. Proprietary funds are funds that operate similar to how a business might operate, meaning you're charging somebody for services and hoping to make a cost, and probably lean more on the charges for services, which makes it more like a business. An internal service fund, we have one internal service fund, and that is our health insurance fund. An internal service fund is a fund that serves the other county funds. So all of our employer and employee health and dental insurance contributions flow out of all of the other funds in the county, and they flow into this internal service fund. And then this internal service fund pays our health and dental bills. And it's just meant to be kind of like a clearing fund. And then custodial funds, they used to be called agency funds until a few years ago when GASB, with GASB 84, changed the name. These are monies that are not county monies, but we hold the money in our bank account. For example, if there's court cases and money is held in trust, it is not the county's money, but the county is holding it in our bank accounts. We hold money here for all 16 township MFT funds. The money that is collected, the property tax money that is collected, that this county collects on behalf of all the other taxing bodies, is not county money, but it flows through county bank accounts. Those are held in what's called custodial funds because we have temporary custody of those monies. It's not county money. But all of these are reported in our financial statements. I brought a copy and is on our website. And anytime, and the definitions are in here in the description of all of our funds. So as always, you are more than welcome to peruse our annual audit reports and look at all those funds. Okay. To get even a little more in the weeds. So within each fund, we are required by our accounting rules to classify the fund balance into different categories. So for all of the funds that I just talked about, the general fund, the special revenue funds, the capital projects, the debt service, we have to say, we have to report what part of that fund balance is restricted, committed, assigned, unassigned, or non-spendable. And let's go through those. So restricted means amounts that can be spent only for the specific purposes stipulated by Constitution, external resource providers, or through enabling legislation. So this is, out of all the categories, restricted is probably the highest level. The committed, and I'll give examples in a second, committed amounts that can only be used for specific purposes determined by a formal action of the government's highest level of decision-making authority. Assigned means intended to be used by the government for specific purposes, but do not meet the criteria to be classified as restricted or committed. Unassigned is the residual, and non-spendable includes fund balance amounts that cannot be spent either because they are not in spendable form or because of other legal or contractual requirements. And I'll give some examples in a second, and I'm using the 2022 audited numbers because it's complete, it's audited, and we haven't finished our 2023 audit yet. So at the end of our 2022, Of the $339 million in fund balance that the county had, 135 was restricted, meaning it was restricted for a particular purpose. You can't use that for anything else other than those restricted reasons. Committed, same thing. It's committed for a particular purpose. Most of the committed at the county is related to items that have already been encumbered via purchase order and resolution. That's probably most of what's committed. Assigned means, and I'll give an example, motor fuel tax revenue. It's, you can't use it for anything else, but we haven't yet restricted or committed it. And so anything else in that fund is going to be assigned. Unassigned is really what is left, what is not restricted, what is not committed, what is not assigned. So of the $339 million at the end of 2022, 48 million was unassigned. The rest was restricted, committed, or assigned in some way. And what I've done on the next few couple pages is, again, right out of the 2022 audit, show where the money is in the county. So if you just look at the fund balances by department and office, the transportation department has most of the fund balance. And I didn't include ARPA because ARPA is temporary, and the way that we account for it, we're only really reporting on it when we're earning the revenue. So we have the cash, but we don't necessarily have the fund balance to report. So the transportation department has most of the fund balance in the county. So at the end of 2022, they had approximately 140 million in cash, or in their fund balance. The general fund comes in second, and then you can see all of the other major funds, and obviously not all of the funds can fit on here, but transportation, general fund are the biggest two fund balances across the county. And then on the next few pages, I have all of those departments and offices and showing of that fund balance, what portion is restricted, committed, assigned, unassigned. So you can see that of the 143 million that the transportation department had, 86 million was restricted, 49 million was committed, 7 million was assigned. When you kind of go down the list, the big portion of the unassigned is in our general fund, which makes sense because it is a fund that doesn't have the restrictions like all of these other funds. Yep.
Could you give an example why we have in the general fund the 17,532 non-spendable? What that is?
I'll have to get back to you on
All
that.
right, sorry. Never mind.
We have a whole procedure at year end where we go through all the funds, and then we have a protocol, and when we're looking to put these the fund balances in the specific categories. I don't have that in front of me right now.
Did you have a question, Mr. Leonard?
Thank you, Madam Chair. Kathy, I just have a question for you on that chart, and thank you for the detail. It's really very good. Oh. It's really very good. Thank you very much. Under the general fund, I understand the total, the committed 5,171,000, the assigned 41 million and change, the unassigned 51,850,000. Is that unassigned money, the ARPA money?
No, that is, so our general fund, that's the part of the fund balance. The ARPA money is in a separate fund. Maybe what we're referring to is over the years, the reason why our general fund balance increased from 2020 to 2022 in a major way, in a very substantial way, is because our general fund received probably over $30 million in subsidies from the ARPA money to pay our most, pretty much our sheriffs, all sheriffs, adult corrections officers for probably 2.5 years, their payroll, their salary, their FICA, their IMRF was completely covered by ARPA funds, which then freed up our regular revenue, such as property taxes, sales taxes. It fell to the bottom line because we used a different source of money to pay their salaries. And of course, when the pandemic ended, when that ruling came that there is no more pandemic, we can no longer use ARPA money because their salaries fell in the category of pandemic preparedness, first responders. They met those eligibility criteria because they were in a confined space for long periods of time. And so we were able to use the ARPA money to pay for their salaries. But as soon as the pandemic ended, we can no longer use any ARPA monies to pay their salaries.
Kathy, could you explain to me then, of that 51 million that's unassigned, what is that
Well,
going to be used for?
that's part of the general fund balance, and it's going down. So this was last year's audit, 98. We're probably going to end up at around 80. We're still posting, probably at around, let's say 89, 90 million at the end of this year in our general fund. The fund balance will come down because we're using it, because we used it to balance the budget. So we're using our fund balance to pay our budgeted expenses. So it will continue to come down.
I had a question.
Ms. Bates.
Of the money that we used, of the ARPA money that we used to refund ourselves for the first responders, et cetera, did that come out of the 103 million that we received?
Yes.
Okay.
Yes, sir.
Just for edification, last year we were using the term surplus. Was that the unassigned dollar amount?
Surplus is just, so in governmental accounting, in private companies, you say net income.
Right.
We use that term net income. In governmental accounting, we say excess revenues over expenditures.
Right.
Or excess expenditures over revenues. And so some people call it a surplus or a deficit. They use those terms in governmental accounting.
Okay. But we were using that term, and that's what I'm asking. Is that really the unassigned?
Not really. It's
Okay.
just, it's monies in our general fund that don't meet the criteria. They're not restricted for a particular purpose. They're not committed in any way. They're not assigned in any way.
So therefore, unassigned is the leftover after you do all the other.
Yes, unassigned, the definition, if you go back a couple of pages, unassigned is the residual from the residual classification. It's a category for the government's general fund and includes all spendable amounts not contained in other classifications. It's sort of what doesn't meet all those other definitions.
Thank you.
Right.
Anybody else?
And these are right off of our financial statements. So if you look at our financial statements, this is, I just put it in Excel. So. Thought I would go through to some of our major funds, the funds that probably most people are familiar with hearing, and talk about what's going on in those funds. And for this part of the presentation, I'm going to use 2023 revenues and sources of revenues. And my little note up there, the red font denotes that it's restricted monies. So our general fund in 2023, and I prepared this a couple weeks ago, so there probably could be some slight adjustments to this number yet. We received about $102 million into the general fund in 2023. The general fund holds the budgets for most of our county operations, the sheriff, the state's attorney, court services, the judiciary, the circuit clerk's office, the county clerk's office, the recorder of deeds, the county auditor, the information technologies department, buildings management department, treasurer, finance, county board, human services, HR, the development office, and the environment office. So the staff salaries of most of the county is in the general fund. There are a few special revenue funds out there. The state's attorney has some staff and some special revenue funds. So do some of these other departments, but nearly all of the salaries and benefits, or salaries rather, of these offices are in the general fund. And the general fund has the following main types of revenue coming into it. It has property tax revenue, sales tax revenue, state income tax revenue. It has some RTA transportation sales tax, a small portion, 10%, personal property replacement tax revenue, cannabis tax, our local cannabis tax revenue, reimbursements. For example, nearly all of the, if not all of the salaries of our juvenile detention center staff is reimbursed. A lot of our, there's also a lot of grants in other departments that are reimbursed by outside agencies. And so those monies have to be used specifically for those reasons. We can't use them for something else. And then there's fines and fees. There's all sorts of offices on here, county clerk, recorder of deeds, et cetera, that charge various fees for their services, and those fees come into the general fund. The next big fund is the transportation department, so KDOT. They have many funds. So last year in 2023, they took in $52 million in revenue. They have 3 property tax levies. They receive motor fuel taxes, both state motor fuel and the local county motor fuel tax. They receive the majority, 75% of the RTA transportation sales tax. They receive impact fee revenue, which is paid by developers. And they also receive federal and state grants for a lot of the road and bridge projects that they're working on, mainly to cover engineering fees. Our next big grouping of funds is development. So this is our development office, our environment office, and OCR, our Office of Community Reinvestment, which is almost entirely federal and state grants. Millions of dollars flow through for things such as the Community Development Block Grant, a lot of the emergency programs during COVID, all sorts of development and environment grants are flowing through those funds. And they are restricted for those purposes. You can't use Community Development Block Grant money to pay a sheriff's salary, for example. Our next big fund is our Capital Projects Fund. It received $12 million. Now, our Capital Projects Fund is really entirely funded by transfers from our general fund. That's where it gets its money. There's a small video gaming tax revenue that goes into that fund, but almost all of the money that funds the Capital Projects Fund comes from the general fund. And so if you look back over time, as part of our budgeting process, you will see that our general fund will budget $3 million, $4 million, $5 million. It varies from year to year to transfer money out of the general fund to the Capital Projects Fund.
Kathy?
Yep.
So
Okay.
we shouldn't look at the totality
Okay.
transfer from general fund video gaming tax. That's not to say the 12 million is all from video gaming.
No,
Okay.
no, it's a very, very small amount.
That would be good.
Just a couple of some thousands. No, 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 no. No, but for our 2023 budget, I'm sorry, our 2024 budget, we budgeted $0 transfer from the general fund to the capital projects fund because the capital projects fund had sufficient funds to complete its 2024 plan, that what they wanted to complete in 2024. At some point, if they complete everything that they had planned to complete in 2024, in order to start working on their 2025 and further plan, they will most likely need an infusion of an additional money to complete those, which
the
would come
general
from our general fund. Right.
Where's that gonna come from?
So these are two funds, the IMRF fund and the FICA Social Security Fund. A lot of governments are set up this way. It's very common for governments to have separate funds for IMRF and FICA and to keep them separate from the general fund. So our separate IMRF and FICA funds have their own property tax levy. So when we do our budget every year, we ensure that we're levying taxes for our general fund, 3 of our KDOT funds, that we have a levy for IMRF and FICA. So what's happening? This is just for the employees that are paid out of the general fund. Their employer contribution for both IMRF and FICA is paid out of this fund. And the funding for that is a separate property tax levy. For employees who work in our transportation department, they're funded out of special revenue funds. So over at KDOT, the transportation employees are funded out of 2 funds, the County Highway Fund, which is a property tax funded fund, and the County Motor Fuel Tax Fund, which is funded by motor fuel tax. Their FICA, the employer share of their IMRF and FICA is paid directly out of those funds because they're special revenue funds. So if an employee is in a special revenue fund, the related taxes and pension are paid out of that special fund. But for our general fund employees, we have these 2 separate funds. So when you see those, that's what that is all about. Continuing on, our health department is another of the larger funds. So in 2023, it received approximately $7.7 million in revenue. Our health department also has a property tax levy of about $1.8 million a year. They also receive grant money and they receive fee revenue for the food sanitation inspections and the well and septic permit inspections that they do. Our insurance liability fund handles, there's 2 parts of the operation for our insurance liability fund. The civil division of our state's attorney's office, their salaries and benefits are in this insurance liability fund, and a portion of our HR department's salaries are in this fund. It has its own property tax levy. And the decision on how we allocate our property taxes to the different funds is all part of our budget process. So over the years, you can shift more property taxes to one fund. Generally, over the course of time, our property tax, the way that we are allocating our property tax levies to the different funds is pretty consistent. There's some small changes from year to year, but it's pretty consistent. The next 2 funds are the Public Safety and Judicial Technology Funds. These are 2 separate funds. And they are used to fund mostly technology for our judiciary and also to fund sheriff's vehicle purchases. And these are the two funds that are receiving, one is receiving 9% of the RTA transportation sales tax and one is receiving 6% of our RTA transportation sales tax. CaneCom is another of our special funds. It's just the operations of our CaneCom department. They received 1.9 million in revenue last year. It's mainly fees, all the subscriber fees from all of those jurisdictions that subscribe to use CaneCom. The last couple of years, in order to balance their budget, they have required a transfer from the general fund. Their subscriber fees have not been able to keep up with the expenses in CaneCom. So we're going on 2 years, it's either 2 or 3 years in a row where the county has had to budget a transfer. And we did do that as part of 2024 in order to balance CaneCom's budget.
Kathy, I'm
Yep.
sorry, to interrupt. Is that because of operational cost or salary cost? What caused that?
Yeah, I mean, over time, the subscriber fees have not been able to keep up with the expenses in that department.
So we're undercharging.
So we
That's what
should
you're-
raise that?
Well,
And yes,
Madam
Mr.
Chair,
Caius.
what percentage is that above that comes from the general fund?
Can you say that again?
What's the percentage of that total amount comes from the general fund of their budget, the 1.9? My understanding it's not very large transfer,
No, it's not, it's several $100,000.
hundreds of thousands.
Yeah. Yeah, I don't have the number at the tip of my
That's fine.
tongue here, but,
Perspective.
yep. Animal control is funded by fees. They brought in $1.1 million in fees. Last year, yes. And then veterans is another of the main special revenue funds where there's, staff. They are funded by, property tax levy.
So just to go back to the veterans, because that's relatively new for us, mandated by the state. So we're giving them $500,000 a year as of last year. Did that happen in 22 or in 21, or is this recent?
No, we've been levying a property tax levy, or we've been allocating property taxes to the veterans.
But a
assistance
smaller
fund.
portion than that.
For quite a number of years, for quite a number of years.
Okay.
And it's our decision, again, how to fund the veterans fund, and the county chooses as part of the budget process to fund it with property tax revenue.
But I believe that there was a state law that was passed that they can regulate that internally and then demand that from us.
I think they can demand to be funded. I'm not sure if it has to be property tax revenue, though.
Yeah, that's a good point. That I don't know.
Right. But the state is saying we have to fund, we were required to fund that department.
I believe so,
Exactly.
yeah.
Yes, we are, is my understanding.
Yes. Yes,
Thank
Mr.
you,
Renner.
Madam Chair. Kathy, concern I have on this, and once again, thank you for all the detail. Really is helpful, and it kind of gives everyone a nice summary of what's going on. Under capital projects, the 12 million that we did not allocate to the capital fund project in 24, is that correct?
For our 2024 budget, we did not budget a transfer of any new money into the capital projects fund because they had sufficient money to spend for their 2024 planned projects.
So what do we do in 2025?
Right. It has to come from somewhere.
But from where?
That's part of the budget process, right?
Well, will have to be monies in the general fund.
Or they could get grants or something
Have
else.
they gotten grants that have amounted to anything in the last?
There's
10
been a
years?
couple $100,000 in grants that
But
have gone into
when you
there.
compare it to 12 million, that doesn't do a whole lot.
No, but you have to look, and if Roger was here, he would have his 5-year capital plan ready. I don't remember off the top of my head what his planned spending for 2025 is.
40 million.
40 million? I know it's over 5 years, it's 40 million, but for his 2025, I'm not sure what he has planned for just
Well,
2025.
If I may finish that,
Let-
well, I'm glad that we're starting this process for the 25 budget now, because I see some areas where we're going to have some real concerns. The only other point or question I had to make is, of the revenues that you show for the departments and offices for 2023, I don't see under the funding any record of the interest earned on our
Oh.
reserves.
Yes, there's interest earned too.
Where is that?
It is allocated to all the funds in the county.
But you're looking for a separate line
Well,
item.
it's $14 million. It's kind of a large amount not to be specific on. Is there any way we could get a detail on that somewhere down the road?
Yes, we are still in the process of posting that interest earned as we speak.
Okay, great.
We haven't finished yet.
Thank you.
And Michelle Gums, yes?
Thank you. Mr. Leonard, I have that document in front of me, and for 25, the 5-year is 8.2 million and 26 is about 8.1 for a total, and going through 28 is just under 42 million.
What I said.
Mhm.
Okay, thank you for doing that research, Ms. Gums.
Thank you.
No
Michelle.
problem.
Does Long Meadow, we got millions of dollars for Long Meadow, does that go into the capital fund or not?
So when that money comes and the contract was recently signed by both the county and the Illinois Department of Commerce and Economic Opportunity. So we are literally waiting for the money to arrive. It could be any day now, which is why that ordinance is being taken through. It went through executive yesterday. It's, if you recall, we passed the ordinance last May, but when we put that ordinance into effect, we set it to expire on November 30th, 2023. We thought the money was going to come here before then, but it's a little delayed. So we need to update that ordinance. As soon as that money comes, the plan is going to be that money is provided to our trustee bank, the trustee for the bondholders, and then they will use it to begin making payments to the bondholders, because currently we pay the bondholders out of the KDOT's RTA transportation sales tax dollars. When those bonds were issued in 2018, the plan was, the goal was, is that we would be paying the bondholders back with toll revenue. But with the delays with the project, the road and the bridge is that corridor is still not opened. It's set to be opened late this fall, early in fall. And so the backstop, the plan B was, if we didn't have toll revenue, we'd have to use KDOT's own revenue. So KDOT for the last several years has been paying the debt. So as soon as we get that 17.5 million, KDOT will not have to use their own money, their RTA transportation sales tax money, to pay that debt service anymore, because we will have given our trustee bank 17.5 million to begin paying that debt service, which is good news for KDOT, because it's been about $1.5 million a year that they've had to pay out to pay that debt service. So that will free up money for their budget.
The defeats.
So that wasn't a capital fund, it goes into the transportation fund.
That Fund 305 is, which is their RTA Transportation Sales Tax Fund, is a special revenue fund. Yeah, it's not a general fund. It's not part of the general
Money
fund.
is not going into the general fund
Or
at
the
all.
capital fund.
No,
Yeah,
absolutely.
it's going to come into the county. That money is going to come into the county and go out
Real fast.
real fast to the trustee bank.
Already spent.
It'll hit the.
And
coun-
then just since we're on that topic, so the bonds cannot be called until 2028, which, because it's a guarantee to those bondholders that they will continue to receive interest. So we can't pay them off right now. We have to continue paying them. And the 17.5 million is not all that we need, which is why we're also getting that additional 12 million from the state. And that is
12.5.
a work in progress right now to get that additional 12. And once we get that additional 12, then we will have all the money we need to fully pay off the bonds.
12.5.
12.5, 12.5, that's right. So,
In there, here and there.
You know,
They adds up.
I wouldn't turn down $500,000. Yes, Mr. Roth. Yes,
Yep.
sir.
So we're getting that money now and we can't pay it off, you said till 28, the bonds?
right, because when we issued the bonds, they
There's a
came with a
minimum.
guarantee that the bondholders, for 10 years, because we issued the bonds in October of 2018, for a minimum of 10 years, they will get interest.
Okay.
Guaranteed. So we can't, it's called calling. We can't call the bonds until that time.
So that money we're getting now will pay off the remainder in 28. So we're earning interest potentially then on that.
So, right, but it's going to be with Zions Bank. They're the trustee. So
Right.
yes, and that is why we have our bond counsel and Spear Financial assisting us, who are going to help fund that so that we're following all the compliance requirements that we need to follow in this situation. And then that money will be used to make the principal and interest payments from now until the call date. But if we get to the call date and we do not have that additional 12 million, 12.5 million, the county may still be liable. So we can't say that we're sort of in the clear until we get that additional 12.5.
No, I understand that.
Mr. Iqbal, you have a question?
Pass in the basket.
Yeah, Madam Chair, I have a question for Kathleen. She mentioned, I think the other day, that this year we will do things differently. What are the different things she wants to do?
In terms of the budget process, I'm going to be getting to that in a few slides.
Okay, thank you.
Yes, sir.
As
Mr.
far,
Hines.
as far as the Long Meadow Parkway is concerned, you just mentioned the 12.5 million, and that would be enough to pay it off? Wasn't there an
Yes.
additional amount that we needed?
No, it's the 17.5 plus the 12.5 will be enough, but 17.5 is not enough to totally defease the bond, which is why we need this 12.5.
I
And
thought there
there's
were
actually-
additional
there's-
contributions from,
There is additional money that is required. We'll be getting $1 million from this, from
Henry
Cook
and-
County. We'll be getting $1 million from McHenry, and then we'll be paying in the $3 million to make us whole.
Well, and I
But
think
I
part
think
of,
actually a little less because we've already paid some of that.
well, and I think part of that will depend on what the proceeds are invested in for Zions Bank, because they're going to have all this money and they're going to be holding this money and they're going to invest it
Absolutely.
so that they're earning interest on it. So as they continue to pay the principal and interest payments, they're also earning money on what they
King
have.
County's liability may be lessened because of interest earned.
Yeah, I mean, the goal would be is that we don't need to, that the county doesn't need to chip in anymore, but
Rob.
I think we'll see. Once they run all those numbers,
We'll see.
Yeah.
And we'll see,
Yeah.
but we're darn close to it. Mhm.
okay. Here, okay. Speaking of interest earned, here is I wanted to just throw this out for discussion because it's been a topic of discussion over the last year. And we've had the state's attorney opinion. But I wanted to bring up what does governmental accounting have to say about this? So currently what our county does is we pool our money. So we have a variety of bank accounts, both checking, money market type bank accounts and investments where we are investing in various securities. When we reconcile our books to the bank, we're reconciling that in total, and then we're spreading, allocating, however you want to use the term, we are allocating cash to all the funds across the county, pooled cash. And then when our checking accounts, our money markets, securities are earning interest, following along how we're allocating that cash, we allocate the interest earned to all the funds across the county. There's a small handful of funds such as Long Meadow, which have separate bank accounts, like the proceeds of the Long Meadow bonds that we issued was handled in a separate bank account. So it has its own separate interest, but everything else is allocated across the county. So what does accounting principles have to say about this? So generally, income from investments is more appropriately recognized in the statement of activities of the fund reporting the investments. Essentially, if you're allocating cash and investments across the funds, the interest earned that follows along with those cash and investments should be allocated. The term that they are using here is more appropriately. There's nothing really in the accounting literature per se, other than all of the structure of governmental accounting, which is that things are restricted. If they're not restricted, they're in the general fund. So in line with our state's attorney's opinion, if you have restricted monies coming into the county for a particular purpose, if you're earning interest off those restricted monies, they should stay with those restricted funds. So if you look at the types of funds at Kane County that perhaps are created and kept in a special fund, but perhaps that special fund was created by this board and not state statute, the largest of those is really our capital projects fund, which happens to have, a significant portion of money. If you go back to where the money is at the county, oops, went too fast. Uh-oh, what happened to all my slides? Oh, here we go. Yeah, after all of the KDOT funds and the general fund, our capital projects fund is sort of the third largest in terms of the money in the county. So when you're allocating interest, it's going to receive more money than any of the other funds after it. So, but that capital projects fund was entirely created by this board. It's not statutory. Our county board created that capital projects fund. So that fund is not really a fund that, in my opinion, meets the definition that, the revenue is restricted, because the revenue is just being transferred from our own general fund. So there's a handful of other funds like that you could say are created by the county board. Our Grand Victoria Casino Fund was created by the county. Now you could say that the revenue coming into that fund, we do have a contract with the Grand Victoria Casino on how we can spend that money. But there really isn't, I don't think, any sort of rule that says it has to be kept in a separate fund. So we do have some funds out there that are not required by state statute to be in a separate fund. And the number one fund is the capital projects fund.
Madam Chair.
Yeah.
So is the development fund missing from that page?
Microphone, maybe.
Is the development fund missing from that page? Because in the other sheet, it went transportation, then development, then capital projects.
It's there.
Yeah, it's at the very end.
But it's bigger. It had 17 million and then capital projects.
Right,
had-
because most of it is going out. It doesn't really have that much of a fund balance at year end.
Thank you.
Yeah, so our transportation department has a very significant fund balance. So last year, 2023, they brought in 52 million. They have more than twice that, almost 3 times that amount in their fund
Who's
balance.
that? You're
The
talking-
transportation department funds. So last year in total in 2023, they brought in $52 million in revenue. I think I had that on this slide right here. All their different types of revenue. But at they began that year with almost 3 times that much in cash. So they had that, plus they're going to get they got $52 million more. So they are the largest in terms of the amount of money that is in fund balance across multiple funds. It's not just one fund, but across multiple funds.
Question, is there best practices for something like that? That would be
Well,
maybe indications, what the,
I think it's all about your cash flow management and planning. As the person who did the budget for KDOT for many years, most of over 70% of KDOT's budget is capital. Whereas like our general fund, it's the reverse. There's no capital in the general fund per se, because we have our separate capital projects fund. But the transportation department, almost 70, 72, 73% is capital spending. And so when you start a road or a bridge project, it's going to take 3-4 years. And so you want to have the money set aside. However, and I've talked about this before, I talked about this last year. If you look at KDOT's spending every year, the budget, the typical budget for KDOT is around 100 million every year, but the typical spending is somewhere between 40 and 60 million a year. And the reasoning is that many of those funds are encumbered via purchase order because when you're doing engineering for a project, you enter into a contract with an engineering firm and you're going to be paying that engineering firm for 3 years. But I also will point out that I believe that most of our contracts are written for everything across the county, that every budget year here at King County is a separate budget year. And we can't guarantee, if you're a vendor, that you're going to be paid next year unless a contract is written that way. So every year, a vendor has to know that it needs to be budgeted in the county's budget every year.
Renewed.
Like if the county closed its doors, like if we just said we're going out of business, I don't think we could, depending upon how the contract is written, I'm not sure that we would owe people.
is there, along those lines, we get a lot of federal money that is
Right.
encumbered. So that
Yes.
if we don't do it the next year, if you don't do it during the
Right.
next 3 years, then like 80% of those hundreds of millions of dollars of projects
Right.
would be then owed back to the feds or something.
Depends on the grant.
If we don't spend it?
Yeah, if you don't
Well,
spend it, if you don't,
Yeah, they allocated it to us. They may,
if you don't spend
we
it.
start a road and don't finish it. And they give us 80 million bucks or
I think we finish all of our roads.
Yeah,
I think we finish all of our roads and bridges.
Get them started, and get them done.
This is kind of like ARPA. Yeah, if it's allocated but not spent at the end of the term, we gotta return the
Goes
money.
back, yeah.
Same principle.
yeah.
Lay that asphalt.
So just to go back to the interest earned topic. So as part of the 2024 budget, we transferred the interest earned on the ARPA fund from the ARPA funds, to the general fund to help balance the budget. But our ARPA money we're spending it down. I think the last time I looked, we had around 50 million in cash left. We started with over 100, so that will be spent down over the next couple of years. And so we can't count on the interest earned on the ARPA funds for very much longer. Does anyone have any other questions on interest earned?
Yes, sir.
Thank you, Madam Chair. Kathy, one other question. Under the GASB 31 accounting principles. Oh, I'm sorry. Under the GASB 31 accounting principle, where you pointed out more appropriately recognized in the statement of activities of the fund reporting the investments. The next line, I'd like a little clarification on that, or the next sentence, I should say. If the amounts are then assigned to another fund or for other than legal and contractual reasons, a transfer is needed to report the movement of the assets between the funds.
So what GASB is saying there is, if you are going to transfer the money, you can't just reallocate it from the get-go. It has to be presented as a transfer.
And does that have to be voted on by the board? If these transfers of funds would have to be voted by the board then? So,
Well, I mean, everything in the budget, anything that we do in the budget is voted on by the board.
and I understand that. I guess more specifically, I was thinking, if we decide to make a change in this, we're not following a statute or an ordinance. This is a principle that we're following that gives us some flexibility to make changes.
I'm not sure I'm following you.
Maybe if I
We
could put
made
it,
it up ourselves.
We kind of set it up. We can change it if we want to change it.
if we want to take interest earned from one fund and transfer it to another fund, the interest earned and transfer it to another fund, then we would take that interest earned, we would discuss, vote, and if approved, then we would recognize that transfer into separate fund.
And we just did that as part of the 2024 budget. The board voted to transfer the interest earned on the ARPA fund to the general fund.
So, but I think
Yeah.
it's bigger picture than that. Mr. Leonard is talking about all interest earned in all the special funds. And if this was potentially 14 million, little 14.75 million dollars is the number I have here. So if that 14 million 3.75 was by each fund approved and then transferred into the general fund, could that happen?
Well, there are certain funds that by state statute, well, there's a couple things. There are funds that by state statute clearly says any interest earned thereon has to stay with the fund. Plus, we have our state's attorney's opinion on the issue, which was distributed last year to the board, which states that any interest earned in a fund that has restricted, that has a property tax levy, fees, or is overseen by an elected official cannot be moved.
Correct. But for government entity that is not restricted, then we'd have flexibility.
John Frank would like to say something.
I'm going to turn this over to
Frank
our
Aseo.
attorney.
I think I read your question as more specific to, does GASB prevent you from doing this as a county board? The answer would effectively be no. It's your own policies that you can do legally. Would you be violating GASB? Possibly, but I don't believe it's going to actually prohibit you. You would have to probably comply with certain things. And based on what I'm hearing Ms. Hopkinson say, is that you would just simply have to vote on it to do so. But she is correct that there are funds where law would prevent you from doing it.
And I totally agree. Thank you very much for that explanation. But I think of that $14.75 million of interest, there is a portion of that that we could do this to, as John just mentioned. Not all of it, and some of it I understand is restricted, but I'd like to get a better definition of that.
So I took,
You want the microphone? Is that, you couldn't hear?
Oh,
They could
I'm
not hear
sorry.
you.
so I took I did receive a copy of the state's attorney's opinion, and following that, basically prepared a spreadsheet, and there's only a handful of funds that don't meet the definition. And that is obviously our general fund, our capital projects fund, the Grand Victoria Casino Fund, the ARPA fund, and that was about it. Everything else fell into the category of it had a property tax levy, it had fee revenue, or was otherwise overseen by an elected official.
So the limited, we'd like to see what the
Yeah,
limited
Yeah.
funds are.
Exactly. We would
I
like
can
that
send that to
defined
everybody.
specifically if we could.
I could
That'd be
send that
great.
to everybody.
Thank you.
Yes, Ms. Bates.
As I think back to last November, this was a big discussion about interest. And I believe you, Ms. Hutchins, said it's not a good idea to balance the budget with interest rates. And I think everybody's kind of getting wiggly, trying to, say, well, let's do something like that. And I think your point was they come and go there because interest rates go up and down, or
Yeah, and I think I think maybe my initial comments were misunderstood in terms of when I was saying you shouldn't use interest earned. I'm coming from the viewpoint of, let's say it's a business operation, right? That because interests, yes, all of our revenue can fluctuate over time, but interest earned has really fluctuated over, I mean, a couple years ago, we only got like less than $1 million, and now suddenly we have a lot of money. So to say, okay, let's go ahead and spend more money because we've had a great year's worth of interest earned, especially to fund salaries in our general fund, I think is not good. I would rather, and I talked about this last fall, when you're having something like good years of interest earned, that should be the type of revenue to help you fund capital projects. Salaries, it's just a risky proposition to say, let's keep increasing our expenses because we've got a lot of interest earned coming in right now, because then what happens if you don't have a lot of interest earned coming in? And you've set yourself up. So that's, if that makes sense.
Yep.
That's what I was trying. Maybe I didn't do a great job last year conveying.
No,
it.
you explained it then and now very well, Mr. Tepe, and then Mr. Surges.
Well,
I just
Thank you.
needed to hear it one more time.
But
I
let's-
wanted to really emphasize what Kathy is saying. If we begin to expand personnel, if we begin to expand services, and we rely upon interest to fund that, that is worse than a slippery slope. We're going to be going to meet a cliff. And taking these funds and putting them into a capital account is something that we should almost as policy do, because this is, I won't say found revenue, but this is a revenue source that will not continue.
True.
Sooner or later, this economy is going to go down to where these interest rates are at a more realistic level rather than they're at the level they are now.
Which
And
is
we
what
need to
every
really
consumer
make
wants.
sure that we don't make that mistake and use this to prop up, as we have already done, to prop up our budget. That is just wrong.
Mr. Berman, I see you, Mr. Surges had his hand up.
In going along with Mr. Leonard, I'm just a really super visual guy, and sometimes being able to see that interest in a column that is just so much easier to explain year to year. Hey, we're way up. Whoops, this year it's way down and we actually lost money. That's good, rather than spreading that out across all the accounts and you can't see it.
Yeah,
That
I
would just
did-
be
I'll-
something that would be.
I have
helpful.
that slide. It was, I think last fall I had that slide. I will send that out again. It kind of shows over the last 15 years our interest earned.
As long as you're tracking it
Oh, yeah.
and,
Have it.
and demand when we go, at this time of year, is there like extra money in that bucket? Yay, or, oh, not so much. As long as it's being tracked, because in the earlier slides of the presentation, it seemed like we were saying and you corrected it. We didn't want to track that in a big bucket. We spread it out across all the
And
buckets.
the county has always done that. It's always allocated interest earned to all the funds because we are allocating cash. If you run a report on the Grand Victoria Casino Fund, you get a balance sheet with cash and just like a little business, just like a little.
All little businesses. Okay.
Little businesses.
Mr.
right?
Berman.
You know, traditionally, over the last 3 years, I guess our capital projects fund has really been added to by excess funds at the end of the year. Where we did not spend as much as we budgeted. And so a significant portion of that went to capital projects, and that's how we build it up.
Well, and it's actually been part of the budget too. It's been part of the budget.
As well.
And this year, you know, as we speak, the Capital Projects Fund has about $20 million in cash in it. In 2023, 12 million was transferred in. They've got numerous projects going right now. They have a plan for 2024. And they have a 5-year plan that totals $40 million. So.
It's all for the updating of our buildings, of our campuses.
That's what I was going to say. Roger has presented to us the necessity for a lot of deferred maintenance, including, if you noticed recently, we were talking about all of the air conditioning on the top of the sheriff's, the jail.
And
is
let's
built
not
up.
forget about our health department.
And the health department, yeah, things like that.
I think there was
So
out of 5,
it's
there's one operational.
required because of deferred maintenance.
Correct.
What's the point?
Okay, it's 4:45. So let's get to the meats and potatoes.
Okay, so I'll go through these function classifications quickly. This is just definitional because you often see a lot of reports in our budget and slides where we're showing our expenses by function. And the functions that these are functions that are sort of standard terminology across the United States in how governments report. So these are kind of generic and very common terms. Public safety, judicial, public service and records, general government, transportation, health and welfare, development and housing, and environment and conservation. So when we roll up our expenses, what falls under public safety? It's sheriff, court services, coroner, KingCom, and emergency management, OEM. Judicial is our court system, state's attorney, circuit clerk, and public defender. Public service is treasurer, supervisor of assessment, county clerk, recorder. We have a very small regional office of education, just a couple of employees. Then general government, county board, finance, IT, buildings management, HR, the auditor's office, and our health and welfare is our health department, and animal control both go under there. And so 2023, this is to date. I'd say very close to being done. Maybe a few more accruals, but for our general fund, 47% of our expenses were public safety. Almost 20% were judiciary. And it's important to note that our judges are not paid by the county. Their salaries are paid by the state of Illinois. So there's no county money used to pay judge salaries. So this is people often ask that question. Capital and debt service was 13%. And I have a note there, particular note that the capital number out of the general fund for 2023 includes the 8 million that was used to pay for the new election equipment. So that was a big time expense. And public service announcement in terms of setting money aside, for capital projects, the county also needs to think about setting money aside for things like that. If we hadn't had this excess fund balance, I mean, we had to pull $8 million out of our excess fund balance to pay for that election equipment. It was not in the budget. We had not planned. There was no separate fund that had been set aside that was building up just for election, to buy new election equipment. So at some point in the future, I don't know how long election equipment lasts, 10, 15 years, we'll need to buy
No.
new election equipment
No,
again.
maybe 8. Just a curious question. When, does the state pay the judges or does the state transfer the money to the county and then we pay them
I think the state pays.
directly? So
Yeah.
they are state employees?
Yeah, I think the only thing that we handle is a stipend.
Okay.
There's a small stipend.
I've always been curious with that.
Yeah. So then all the other funds in the county, all the rest of them, except for the custodial, because it's not our money, 42% was transportation. And the next big chunk was ARPA and then some capital and debt service. But as you can see, mostly transportation. And then this last picture is everything, all the funds in the county. 24% of the county's budget, so almost a quarter is public safety. Almost a quarter is transportation. And then judiciary and capital and debt service, I kind of highlighted in color there. That's where most of the money at the county is being spent on those big functional areas. Yes.
Yes, Mr. Roth.
Roth here. ARPA will go away then, because as we spend it down, right, it's
ARPA's
dropping.
going to go away as we spend it down.
Okay, thank you.
Couple more years. We have through December 31, 2026 so far. Although my lifetime of dealing in and out of government and nonprofit and auditing governments and grants and my experience tells me that if enough people are asking the federal government to extend the deadlines, I wouldn't be surprised if they extended the deadlines, but we need to keep to December 31, 2026.
Okay, so we're not
until
going
they
to count
change
on it,
it.
but you got 50 states that'll be pounding it.
Number of employees, all funds. It's kind of tiny, so you can magnify it on your computer. But if you just look at the trend line over the last 10 years, the largest growth in terms of number of employees is in our public safety and judiciary areas of the county in terms of functional areas.
Madam Chair.
Yeah, yes, sir.
Yes, Kathy, I'd just like to make a point here. I took a look at the employment chart here from 2014 through 23, and we went from 1,164 employees in 2014 to 1,294 in 2023, which is an increase of 130 employees. That's a net increase. That is an area where, believe me, I think anyone working here, we should do everything we can to make them happy and pay them properly. But I think we have to start looking at not increasing the employee count anymore, because that equates to about 1% a year, about 13, 14 employees a year. And it's $70,000 each. That's about $1 million a year. Then you add on the built-in contractual raises we have of say 3 to 4% a year. That's 5% a year increase automatically each and every year before we add anything else in. So I think these are areas where we've really got to look at things and find ways to maybe control that a little bit better.
Gee, I don't think there's a disagreement.
Madam Chair, I love that idea. I like that idea, but we also have to temper that with the costs of outsourcing services. So that's, I think, the big question, right?
Yes, and both of you, and Ms. Hopkinson nodded at that as well. So it is a delicate balance.
And I will say, you know, when you have things like an ARPA, which is temporary, but if you think about all of the staff across the county, which 5 years ago, there wasn't ARPA. And so you need dedicated resources to work on that, but at some point it will be gone. So anytime you have a grant program, there's a lot of extra resources that are necessary to manage that grant program.
And the one other thing, if I may, how much, I'm curious, between the 10 years, what has been the population growth here in Kane County? We know we saw a huge growth in 9, but you know, that I can't answer that, what the difference is between 14 and 24 and what the projected increase is going to be, because we know that Pingree Grove is already projecting a huge growth. So if we need additional people in our staff to be able to manage that growth for the restaurants, property inspection, et cetera, I can speak to those because there's more businesses. We have to fill that capacity. Yes, sir.
Kathy, this is not a question, it's just a data dump, if you will. One of the things that I find most interesting with the county in relation to the offices versus the departments and the generalized budget. I just know in the private sector, we kind of bill by hours and stuff like that. And I know that I get charged back. I know what my charges are to the IT people from this office and this department and blah, 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 blah. We seemingly don't track that in any way, shape, or form here. And I don't know that it's feasible or possible, but sometimes I look and I go, if we have this giant department called IT that serves across both offices and what we control, I would surely love to know an accounting of that or how that is shared. Equally so, a state's attorney is sitting here in multiple days. There's lots of them sitting around. How are those getting charged back, and what does that look like? And then finally, if I could, when we look at things like this past year or two, we have introduced some additional employees and staff into the equation under the notion that, everybody's going, we're tight for money. How could you be doing that? But sometimes you got to spend a buck to make a buck. And we introduced a couple of new people, Mark Van Kerkhoff's division for inspections, that was truly designed to unburden some time from the state's attorney's office. Yet we have no quantifiable measure by which to say, yay, that was a rousing success, or boy, we fell flat on our face. And again, this wasn't a statement or a question, but more of a concern to say, I would love to be sophisticated enough at some point to say, wow, that really, those initiatives that we put forth, they really did bear fruit, or wow, those were the dumbest things we've ever done. So
a couple things. So our IT department, and I've often asked why it's only IT and not finance and HR per se, but our IT department actually charges back all the special revenue funds across the county. If you go back to the beginning of the, and actually governmental accounting, the purpose of internal service funds. So we have the health insurance internal service fund, but a lot of governments take what they call like their essential service departments, IT, finance, purchasing, and they have their costs in an internal service fund, and then they charge it back to all the other funds. That is very common. But starting maybe 5-6 years ago, our IT department, via county board resolution, started charging back all the special revenue funds. So as part of the budget every year, every special revenue fund gets a rate per employee charge that they have to build into their special revenue fund budget. And then that money is transferred out of the special revenue funds into the general fund. So for the last several years, there's almost $1 million coming into the general fund from all the other special revenue funds across the county. I would ask why, as I said, why doesn't finance get to charge back, or maybe, state's attorney, et cetera. Now, the state's attorney's office is going to be charging back KDOT for the services that they provide, the legal services that they provide. But that's something that definitely can be looked at, absolutely can be looked at. And then your second question was?
Successes.
We've,
Oh, yes. I have a slide that's going to be talking about that in a slide or two.
Today.
So, yes, today.
Okay, we are going to call this a day at 5:30.
Oh, we're going to be done before then.
5:30, the lights are going out.
And the
Only 2 slides left.
Forest Preserve too.
2 slides left.
Forest Preserve too pays
So,
IT.
the way that we have always done the budget at the county for as long as I've been at the county, and I can't speak to before then, but everybody works on the numbers, and then sort of as an afterthought, there's these things called mission and goal forms. And I don't even know if, as part of the budget process, that they're really even presented, but they are included in our budget book. And it's sort of like an afterthought, the way it works right now. Did you get your mission and goals form in so that we can include it in this big 3-inch book? And I am proposing to reverse that. This is my old consultant, and reverse that and actually start our budget process where the departments have to work on their goals and objectives first.
We're doing that. We're doing that.
Right. Right.
I've given
But
them
all
2 weeks.
departments
2-week
and
notice.
offices.
2-week notices for our government offices. I just contacted them all today. So in 2 weeks' time, they'll have their goals available for us and dispersed out to the committee chairs.
And I think and it's, I'm also proposing that the performance indicators are a little different. A lot of the performance indicators, not all of them, but many of them that departments have tracked are sort of tired. It's just sort of, as I said, an afterthought. A lot of what is presented is outputs and not outcomes. And you could probably have a whole class on this. What's the difference between outputs and outcomes? And sometimes it's very hard to think in terms of outcomes. But I'm proposing that we try to do that. And maybe it's not 100% perfect in year one, but it's something to strive for.
Mr. Sturgis, that'll answer your question.
So a department would then show its goals and objectives, what activities, and really you need to start with your desired outcomes. What is your desired outcome? What do you hope to achieve for the greater good? And then what are your goals and objectives to achieve those desired outcomes? And then your activities are, what are you doing? I have this program. I have this responsibility. And so your performance measures are really measuring how you're doing to accomplish your desired outcomes, versus things like number of purchase orders that you filed this year, which are, if you look in our budget book, those are some of the things that are being tracked. So I'm proposing sort of a new format, and this is for discussion today. This is why we're having this committee of the whole, that in half hour. Yeah. That we do this, and then people can work on the financial part of their budget. And so the schedule would look something that the county board is providing direction on how they're going to balance the budget, because the 2024 budget policies that were adopted by the board last year were just for 2024. So, I don't know. That was kind of the first time that the county adopted a document like that. We'll see if we need to adopt a separate document like that. But then in February, and departments are working, and we were originally going to have this meeting 2 weeks ago. So things are a little delayed. But departments are working on their mission and goals. Then the budget module is opened. Then the finance department is going through just to make sure things are accurate, everything's disclosed properly, it's complete. And then this would be a new recommendation, and that the departments and offices meet with their home committee chairs and vice chairs and/or other board members one-on-one before coming to present in front of the entire home committee. And I think this would be a good job, or a good thing to do, because it would give an opportunity for a department and office and a committee chair and vice chair to go through in detail the budgets for each of the departments that they oversee. And then you would come before a full home committee meeting and then move on throughout the process.
Are there any questions with this? Yes, Mr. Berman.
Well, it would be nice sometime for us to come up with a strategic plan from our county board to start with before we give that opportunity for our departments to come up with their objectives and goals.
Well, I would say this, I mean, for a county government operation, most of everything that you're doing is there's a law behind it or something like that, that says you have to do this. So in terms of strategic planning, I think there's obviously growth that you want to strategically plan for, but at a very basic level, there's basic stuff that, you know, the sheriff's office should be doing, finance department should be doing, the state's attorney's office should be doing. So I think, you know, there can be some basic things that, you know, must be done, have to be done by law. And then there's obviously other growth type strategic goals.
Yes, Mr. Leonard.
Thank you, Madam Chair. You know, I would like to make a suggestion that maybe we come up with the projected amount of revenue we're going to have for 25 and then present that to the different departments and say, this is what we have. Because what we're doing now is we're saying, what do you need? What do you want? How can we help? And we know there's going to be increases all the time. If we take a look and predict our income, which I think is very predictable for 25, and then go to the departments and say, okay, last year you got X. This is how much we had in revenue. It's X plus one or whatever it may be. And we have to allocate that appropriately throughout the different departments and to the elected officials. Then instead of us trying to find money after they convince us of their needs, we're letting them know we don't really have the money that would satisfy all your needs and wants.
Or perhaps in some funds there may be. But the other thing to follow up on that, I think, very solid idea, and Mr. Berman as well, is if we could get for all of our departments what their mandated is and what we have to spend, what is mandated, and then anything extra, which is flexible. That's flexible spending, and that's the one that we can either say, yes, fine, or not so much this year.
That's why I thought working on the mission and goals forms first would be the shortest, fastest way to get that information, is because the departments already have to, as part of the budget process every year, they have to fill out a mandate form anyway.
Correct.
But to describe that information in a different format for the budget book. And I do have on the last slide that, you know, for discussion, yes, I think the number one decision that needs to be made is departments do want to know, is the revenue side. because I think departments will put together the budget. But if you just ask everybody to put together a budget, they're going to put together a budget. But they need to know what the county board wants them to do is what they really want to know. And so in terms of revenue considerations, unless there's some new state law or a change to state law, which of course can happen at any time. As far as we know right now, the revenue sources for the general fund are the same revenue sources that we have had in the past. It's property taxes, the sales tax, the income tax. There's some grant reimbursements coming in. So, I am not aware at this time of any big new revenue source for the general fund.
Mr. Sturts, you had a question.
I just, Bill, and Madam Chair, I'm agreeing with both of you on this. The notion of this Chinese fire drill that has continued to happen year after year, going into October, November, you're feeling like you have a gun on your head and a lot of sleepless nights, doesn't need to happen. We can get in front of this now by saying, these are truly the projected revenues we have. This is what we have to spend. If for some reason you have some compelling argument where, we're just squeezing a balloon. And if we squeeze tight here, it pops out there, yay. Yeah, if there's some compelling argument why we need to be doing something or modifying something. For example, right now we've had, Michael, you're in the room. The discussion has been, a concerted effort on mental health and increasing the county's function there as we evaluate 708 boards and do needs analysis and then our buildings falling apart. Okay, we get that. But that doesn't change the finite amount of money that we have. And I think getting that out there sooner, I don't know why that can't be done in tandem with what you're suggesting.
Yeah, what I can do then is come up with 2025 projected revenue, although it's an estimate, and we start there.
I have another question, and why we have Mr. Frank in the room. We can control government spending, but this board is in charge of, but we've got elected officials who have ultimate demand flexibility, my understanding. So if state's attorney says that we need additional new staff for new programs, some may be mandated by the state, some may be operational in need, or new programs. And from what my understanding is that they can come and they can demand extra money. But we only have a small pool. So how do we appropriately, from a budget perspective, respect the work that they are doing, but also have them respect the limited resources that we're able to provide?
Well, at the end of the day, we only have what we are going to receive. So at the end of the day, the budget that's approved by the county board is the budget.
But Mr. Frank, what is the legal ramification? Because you have mentioned before that there could possibly be, although probably not, a lawsuit that we're not providing the necessary resources.
So, SEO Frank, there's a push-pull to this. And the push from an elected is that they have internal control over the operations. And that's in relation primarily to their function. So if you tell them, we don't think you need half the people you have, and they say, no, I do, and they can provide a reasonable justification for that, you're going to lose. If, however, an elected walks in and says, I need $1 billion, and I'm using obviously facetious examples, that's not reasonable, nor could it ever be. They're going to lose. And when I say lose, what I mean is the way this would work out would be if an elected says yes, you say no. An elected has an option for what's called a mandamus action, which is an action to compel the county board to fund the request. And the long story short on that is it would go to a judge in this county. And then we would find ourselves, I think what this county found itself in about a decade or so ago, where you will be paying for 3 separate lawyers. So that's the push-pull here. My recommendation to you in all instances would be not to do that. It can usually almost always be worked out, but I think the way you should think about it is electeds have the ability to ask for reasonable support. They do not have the right to ask for unreasonable things. And that's probably the way you should generally look at it, as a kind of a litmus test for yourselves.
Who defines reasonable?
Well, as
Oh,
one of
sure.
the, as one of the groups of lawyers that was involved in the previous suit, and some board members will remember that suit, the appellate court rejected the concept that there was funding on demand. And as Mr. Frank points out, the elected officials are entitled to what is reasonable. And Ms. Bates says, who decides what's reasonable? And again, a court would decide.
Correct.
But what the lesson to me of that case is that there is no clear answer in the structure that the state has set up, because the county board has the quote power of the purse, and it must fund what is reasonable. And then again, who decides what is reasonable? There's a very few number of cases. If you want to tell the county treasurer that he could only have 1 employee, you'll lose. That's been held to be unreasonable in a lawsuit in another county. If somebody says, I want 1,000 employees, you will probably win. Somewhere in the middle is the suggestion that everybody needs to work together, unless you would like to continue to enrich outside counsel.
Yeah, and I think that's the key here is at no point will either the county board or the elected official win, because probably the fight over a reasonable amount of money would be small enough that it would be subsumed before you would even get to discovery by the lawyers.
Mr. Cass?
It's all fascinating. Can we go back one slide? I mean, that's all great. What's going on there? This is a great discussion because we've had it before, but I want to go back to what we can do and what our process is going to be over the next several months. And you had a slide, maybe the one before that, you had that's the timeline. No, yeah, you're there. We provide direction. So we need to decide on what we need to do, provide direction in February, and the mission and the departments will then prepare missions and goals. And then that could be part of what Bill was saying, is having our what we're gonna have to spend, because we're developing that all the time. And then so that our next step, what we've done today is to say this is the procedure we're gonna to stick with and proceed with today.
Yeah, and I think as this discussion is going, as we have on the last slide, if the revenue side is dealt with first, this schedule can slide, because the reason why our budget process has such a dramatic finale, a very long dramatic finale, is because we're trying to balance a budget after all the expenses have already been loaded, and we can't balance. And I should say this is only for our general fund. All the other funds typically do not have any problems balancing. It's our general fund that we don't have enough money
Big one.
right. And it's most of the salaries and for most of the operations across the county.
Are we figuring in our reserves as well, or the expendable reserves that we
Well,
have?
again, that's something for the board, I think, to give direction, because Our county policy has always been that we don't use reserves, but we end up using
We use reserves anyway.
reserves.
So, and we've talked about it. That's what we
Right.
set up our budget for this year and potentially for next year was to draw down the reserves because we have an immense amount of reserves. So that has to be considered as well. So if we start out by saying, oh, we're only going to have this much income this year, and we all go, oh my God, we got to cut all of this stuff. And then we go, well, we were going to use the reserves anyway, right? Up to a certain point. But so I'm trying to get back to where we can not get diverted with what we need to do now as far as the steps.
I like what you're saying, is that if we're going to be using reserves, that decision is made soon
Yes, yeah.
rather than later. Yes, sir.
Well, I think that, I really feel, Berman here, I really feel that our problem last year was we could not really decide on how we were going to fund things. And so therefore, I think our attitude has been that we are willing to use reserves. So I think that in our budget process, as far as what we're going to estimate what our income is going to be, I think we need to include in that a certain dollar amount, whether it be $10 million or whatever, from reserves, because that's the attitude of what the board has displayed in prior years. So that I think we should do. As far as I think we need to make that decision today to follow your direction or what you want to do, Kathy. And I think
mean,
that
Well, no, we cannot make a decision. We
No,
can
but-
make consideration, and that decision can be made at your finance committee
right.
because you're in charge of that.
Yeah, finance committees in a few weeks.
So
We
that's
can, well,
step we want to take.
Oh, yes.
would be, that would be a huge help is to that would set the tone for the budget preparation. That would be the direction from the board that we need.
Okay, okay.
So that would then come through finance? Is that what we're talking
Absolutely.
about?
They're in-
And it would
They're
include
charged with that.
what we're talking about, what revenues we'd get, what we would get as far as we're going to use for reserves. And then we have the departments kick in on their end.
So
we as a board may decide that we don't want to use the reserves, but
Well,
we have in the past, everything we've demonstrated is that we do want to use it.
But I think to
we are-
Chris,
we are-
Madam Chair, if I can,
So,
to Ms. Madam Chair.
okay, hold on, let's, hold on, just slow down for a second. To the point, as we're all looking at this is February 8th. Finance Committee is charged with beginning this process. They're not going to be meeting. We're not going to be discussing this as a board until March. So unless we have a special board meeting later in March or a special finance committee meeting to move this process along quickly, that's a great idea to just hone in on this one topic only, which may be absolutely excellent. So we can fast track this because of that snowstorm. We were delayed by 2 weeks to be able to schedule this appropriately. So we've got to get this caught up so we can at least maintain some kind of scheduling for you.
Yeah, if the revenue decision is made up front, the rest is pretty standard. The rest is pretty standard. The hard part, I mean, if you look back at all the meetings that we had last year, we spent 3 months trying to find money, September, October, and November. So if you make that decision at the beginning, it's, yeah.
Take us 3 months to do that.
Well, no, hopefully not. Mr. Surges.
Kathy, if I can, based on what my colleagues are saying, do we have an agreed amount of how much the reserves are supposed to be spent down? Is there a concurrence on that or is?
Well, we've got 60 days, right? It's 90 days. My apologies, 90 days.
Yeah, we
don't spend.
We have a policy that our general fund, our target balance is to have at least 90 days of reserves. That is the financial policy of the county board.
And it's.
And we have more than that. We have more than that. 90 days is pretty standard.
Mhm.
Okay,
Yes,
but you
Ms.
could
Bates.
supply something for us with that information for finance to begin looking at. Thank you.
So, we haven't, none of these, funds are called the reserve fund, correct? Did I miss something here? So, I'm asking the expert, please.
So the general fund has sub-accounts in it, and some of the sub-accounts have the name reserve on them.
Okay.
But every single fund in the county, basically what a reserve is, it's another name for fund balance. It's the same
Okay.
term. It's whatever you have left over. It's the difference between your revenues and expenses.
Yeah, okay.
And then whatever builds up from there.
Okay.
All right, Ms. Gums?
Thank you, Madam Chair. Ms. Hopkinson, just a quick question for clarification. We have 3 months in our required best practice reserves. If I recall what you previously in this meeting referred to as excess funds, was along the lines of $42 million. Was that accurate?
Yeah, we have more.
Yeah, so over and above the 3 months.
Yes.
After we reduced the 180 days, it was about 42 million, correct?
Yes.
Okay, thank you.
Mr. Berman?
Thank you, Madam Chair. It would be just as easy for
thank
us
you.
to transfer these funds
Thank you,
to a
Mr. Tebby.
capital
The other
account.
Tebby.
Kathy, it would be just as easy for us to transfer some of these funds to a capital account, would it not?
Our reserves
Yes.
funds, if the board decided they wanted to do that, they could do that too.
That would be very prudent to replenish that capital fund because we know we're going to need new buildings and we don't have any substantial capital fund established in order to be able to do that.
Right, we have, right, I mean, there's short-term planning and long-term. The county needs both.
So you're suggesting that the $42 million that was just referenced be moved over to capital rather than being kept into a excess reserve fund?
No, I would want to retain a small part for Mr. Leonard's use, but but yes, a big part of that or a substantial sum of that, we should consider putting that in capital funds.
Okay,
And
that
that's part of the planning process that we should consider.
can be thoroughly discussed at the Finance Committee and then brought to the board for
Yes.
their approval.
Yes.
Ms.
Well,
Bates?
that was my point, that to put things, to just say, let's sweep all this money into the capital fund is a big decision. And what about our operating funds? To put, I would say, Mr. Tepe, that we have to think about that for a long time and discuss it.
Yes, sir. This side of the room is very active. This side, except for Mr.
Oh,
Caius.
they're
is
asleep.
very
No,
quiet.
don't bother them. Don't wake them up.
Kathy, my thought process on a little bit of this is when we find something that a problem that we've had, we've always set a goal of saying, we can't fix that overnight, but we can fix that over 3 years and ramp up and make that happen. I would like to suggest employing that same theory of spending down those funds that, if we want to bank it into a capital fund or something, but is it the goal? Am I hearing the goal is to diminish those immediately, or is it a spend down of them over a period of years?
That's the finance.
For what it's worth, yeah.
Our goal. It's up to us.
Let's move it on to finance.
Discussion.
This has been, have you achieved your goal?
Okay.
Yes.
I've got to say thank you, Madam Chair, for this Finance 102 class. And I'm looking forward to Finance 103, but this was really good.
And we're going to throw you into the graduate level program right away. Okay, with, everybody's fine? Your turn, sir.
Don't have a meeting. I would like to suggest we adjourn. Now, you can vote it down. We adjourn.
I think we should
Can't vote.
discuss.
Good night, everybody.